Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Brent, welcome to the show.
Hey, it's good to be here.
Man, pleasure to have you. How are things in the Detroit area?
Getting chilly. It's that time of year.
Brent, I'm so excited to talk to you today about the Detroit market. I mean, it's one of those things that, obviously it's had significant ups and downs over the last, 15, 20 years. And I really am excited to hear what the boots on the ground kind of see in that market, what you guys are investing in and where you see things going. Before we get to that, can you kind of give us an idea of where you started, where you are now, and how you got there?
Okay. Real estate wise, I come from I'm not really a real estate family, but my uncle did develop some subdivisions in the 90s, in the 80s, actually in the 90s, and turned them into, houses and built subdivisions out. I worked with him a little bit, swinging hammers and digging trenches and ditches, back in the 80s. Proceeded to do some technical construction work in the 90s, with satellite systems, back when they had the big dishes. And there was a lot of home repair and commercial work involved with that. And then went on to work in home improvement sales in the early 2000s. And also did some computer research with, I was under a grant from NASA at university, doing human machine interaction and artificial intelligence, intuitive response stuff. But I looked at grad school as an option, and just the money wasn't there. I had a kid on the way, and it just didn't make sense. So I needed to earn, and I couldn't afford to have the luxury of going to grad school and making no money for 4 or 5 years. So I stopped that track and shifted gears and went into real estate investing and real estate sales as a platform to allow me to pay the bills and take care of a kid. So that's where we started. And my first purchase this century was in 2005, a duplex. I lived in one unit, rented out the other unit. And since then, I've done over 1,000 transactions, currently have 115 properties under management, and own 51 buildings.
51 buildings. That's a lot. That's a lot of scale in a few short years. Talk to us, I guess, about the processes, the kind of, the things that you thought through as you built that, hiccups you ran into along the way. I mean, what can you share with us on that front?
So there are definitely a lot of hiccups and a lot of learning and some very expensive education in there. Bad partners, bad contractors, shady dealings of people in the industry, a lot of learning and a lot of learning curve. I had the fortunate benefit of having a couple good mentors that I worked with, and still do. I have a really good sales and business coach and real estate coach now that I work with, and a good life coach. So I've got the help and the support staff that I need, or the support team. I won't call them staff, as well as the technology and the systems and the processes that have made things easier, and the ability now to really kind of redline people really fast that throw red flags up early. I just move on to the next. There's enough people out there, and the world is flat, where I just don't want to work with people that are not quality people with good core principles and values. That's the most important thing. After that, everything seems to fall into place. But when I've shorted myself in those areas, that's when the problems have come.
What were some of the things that made you perhaps take second best? We'll use that term, take second best, when maybe you shouldn't have.
I work almost exclusively in Detroit City, which certainly has, it's got a lot of press worldwide and certainly nationwide, but it's got a lot of ups and lots of downs. And we work in the Class C and Class D neighborhoods, so we're dealing with low income housing, affordable housing mostly, not the sexy stuff in downtown or midtown. So we've got those issues, and in those neighborhoods, there's a skilled trade shortage nationwide, where even in the best neighborhoods, it's difficult to find good trades. Now, if you're a skilled tradesperson and you can work wherever you want, why would you want to work in Class C, Class D housing in Detroit? And the answer is, for a lot of people, they just don't want to deal with it. No one wants to get their truck broken into and have tools stolen. They don't want to be harassed on the way in or out of a house by neighborhood people who are looking to, just cause trouble. So they avoid those neighborhoods, and it's hard to find good people to swing hammers and do work in those types of houses. So we've had a challenge with good team members and good crews, and sometimes the temptation is to get stuff done is to cut corners with people. And I've been burned almost every time that's ever happened in the past, so I just don't do it anymore. We only work with people that come across as good right off the bat and are well vetted and can deliver results. And even though they're fewer and farther between, it's worth taking the time to find the right people to work with.
Right. And how do you convince those people to work with you? Again, going back to that Class C and D neighborhood.
Oh, we're not alchemists. I don't try to convince anybody of anything. If they're interested in working in those neighborhoods, they self-filter. So we get people who either have a desire to be a part of the Renaissance of Detroit, or they're from Detroit, or they're Detroit friendly for one reason or another. But we're not trying to convince someone who works in northern suburbs to come down to the city. That's not what I do. I'm not an alchemist.
Right. Understood. And a lot of people just not just your contractors, but obviously as investors as well, shy away from those neighborhoods. What have you done to kind of mitigate some of the problems that go along with running or owning investment property in those areas?
So we work with a lot of single family homes. Detroit's kind of they call it the Paris in the Midwest. It's basically spread out. So it's not like New York or Chicago or LA where you've got apartment building after apartment building after apartment building. Detroit has a huge amount of single family homes and some smaller duplexes. So what we do is we try to buy properly in the right neighborhoods and the right blocks, even though they're Class C housing and dated deferred maintenance type housing. You can still buy a property on a block where most of the houses are occupied, and you can see pride of ownership, and it's a place where it feels comfortable to be in. Those are the areas we like to buy in. We don't buy in war zones, and I don't buy in post-apocalyptic war zones that were the war zone in the 80s or 90s, early 2000s, and now it's just farmland. Although we are starting to buy in those areas because some of them are what I would call the edge of hip, where the transitions are occurring. So those are areas we actually like to target where they were a war zone, but now they're post-apocalyptic kind of wasteland, but they're starting to exhibit signs of transition and growth. Kind of like, after the snow falls here in the winter and the first part of spring, sometimes you see the greens popping up through the snow. Those are the types of neighborhoods we want to look at, the areas that are formerly ignored and dilapidated and distressed, and now they're starting to see action. So what we do to avoid those risks, though, in those types of neighborhoods is, in addition to picking right, we do buy a lot of multifamily, and that helps with theft and vandalism, because if you've got some tenants in an opportunity and the property is functioning at some level, even if it's limping, you mitigate the risk of theft and vandalism. And the other thing we do as far as tenant base goes is we almost exclusively now focus on subsidized housing for those types of those tenant base. It's really hard to collect and chase someone who's living hand to mouth and paying $700 a month in rent. What we do now is we actually use subsidized tenant base, and we get Section 8 housing. The standards are a little bit higher for the rentals, but the rents are much higher, and it makes more sense to go that route in these types of houses. So on our nicer homes, we do market rents and cash paying tenants, but on the cheaper homes and the more rougher areas, the high cap areas, it's all subsidized.
Right.
So that's a huge mitigation of risk from a cash flow standpoint.
Sure. And with those tenants, they have a lot to lose too if they're, if they get, into trouble with you as well. Is that right?
Yeah, Section 8 housing, if you don't, it takes a while to get on the list, and people don't want to get kicked off. So they tend to, not as a rule, but more than not, tend to provide a level of communication with the landlord and the property management and don't do things to wreck their relationship with Section 8, because those vouchers can add up to be a lot. The subsidies can be, $10,000 a year. For someone who has little to no income, that's huge, because you basically get safe, clean, functional housing provided by the taxpayers, by us. And you're dealing with people who are, by and large, single mothers with multiple children, who don't have any other options. They have children to take care of. And, I'm not really trying to get a political sense on here in the whole thing. I have my views on both sides of the coin there. But it is what it is. And we have a huge amount of single mothers in this country who need housing. And if the prices are going to be higher for me as an investor, or me servicing my investing clients and partners, and the rents are stronger, and they really want to stay in the property and make sure they don't get kicked off Section 8, it's a win-win-win for the microcosm of the investor and the tenant.
Right. That's fascinating. What when it comes to working, with you, are you just building your own portfolio, or do you represent investors as well that are going out to, looking for, real estate, looking for single family and small multifamily properties there in Detroit?
I work with buyers in the sense of I help them find properties that either we own or control, or that we're selling for someone else, or to help them partner with me on deals. I don't represent buyers as far as clients go. But there's plenty of opportunity to buy in the city if you are connected to the right people. And I'd like to think I'm the right person, and I'm also connected to the right people.
Right. Well,
so by and large, partnerships, and I don't have a lot of investors that I work with as buyers clients, though. I just don't do it anymore.
Right. Understood. Talk to us about kind of the rise and fall, and the rise again of Detroit real estate, especially on the residential and small multifamily side. I mean, you guys have had, some swings up and down, and tell us why you think that Detroit is still a great place to invest.
So I got started in the business, really strongly in early 2005, 2004. And that was near the peak. I think the peak's values were in late 2005. So that's really when I got rolling. So I came in at the top of the hill. And then, of course, we experienced the great crash and recession of 2008 going into 2009, and it actually lasted for years here in Detroit City. So I've seen the bottom end of it for sure. And then the regrowth and rebirth, then the opportunities that were created by the flat out economic destruction and devastation of the Detroit's own Hurricane Katrina of economics here. The phrase perfect storm is used a lot, and it's become almost cliche, but I think certainly what happened in Detroit in 2008 going into the bankruptcy was a perfect storm of events here. And it created a fertile ground to the point where the New York Times was referring to Detroit a few years ago as the new Brooklyn. So, the opportunities that have happened here for startups and young millennials at the time and entrepreneurs were huge. Now you've got a city that's kind of evolved through this whole process over the last dozen years and has stabilized in a lot of areas, but still has a huge room for growth and expansion, both geographically and in individual assets. Detroit was built for 2 million people. It had 139 square miles of 2 million people living here in just a few decades ago. And now you've got about 700,000 living in that same land. So there's a huge amount of land, lots of infill and new projects going in. Still to this day, they're doing construction on projects in the city that are development opportunities. So we've submitted RFQs and RFPs on a couple smaller developments, mostly infill housing and renovation of existing properties. And we're actually looking now at a 56 unit LIHTC program. To do a full renovation, completely vacant, top to bottom, subsidized, stabilized housing, affordable, maybe 60% affordable for a 15-year project. So that's what we're working on right now as far as big stuff goes for us anyway.
Right.
In addition to a lot of duplexes, a lot of single family houses, and some small apartment buildings.
Right. No, that's fantastic. Talk to us about when you said 60% affordable housing. So can you walk us through how that process works?
So the affordable housing is basically saying that a building is going to be funded partially by tax credits and low interest loans and grants from the city. But the caveats is that you have to have a certain portion of that building that's affordable housing, which means that you've really got to have lowered rents that meet a criteria of the median income of the area. There's all kinds of calculations that are used. But basically what it means is you cannot have a fully gentrified hipster building. You have to have a building that's partially affordable for people that don't get displaced. So in my mind, it really, this whole concept turns the concept of gentrification, which, a lot of people use as a bad word. I love it now because you've got a building that you can turn in an area and you still keep the lower income people in the neighborhood, and they're not displaced as they would have been, say, 50 years ago when neighborhoods exhibited transition and gentrification. So there's still an opportunity to make money, to add value, to make the world a better place because I live in it. And with my actions, improve people's lives while not displacing people. So that's the upside benefit from a moral and a social standpoint from affordable housing. From an economic standpoint, the projects tend to be very expensive compared to what it would be just to have, market rate crews come in and do it. But because you're using Davis-Bacon wages and Prevailing Wage Act labor and OSHA standards and all those caveats and hoops that need to be jumped through, things tend to be really expensive, but the government comes in and gives you tax credits, which you can then sell to larger corporations, as well as, like I said, low interest grants and loans that make projects like that more affordable and doable.
That's interesting. How do you sell a tax credit? You just said something I don't know anything about. So what's that mean?
Yeah, that's a call for another person, another day. So
Okay.
I am not the tax credit guy. I actually have a call in with our tax credit guy later this afternoon, and one scheduled for next week. So there are people that specialize in doing that, and I'm not exactly sure how they go about doing it. But what ends up happening is large corporations and utilities, I guess, tend to buy them, and what they're doing is they're paying pennies on a dollar for tax credits, which they can use then to offset their tax liability. So that's how big corporations can, in some ways, avoid paying taxes by buying tax credits at a discount. I don't know exactly how it all works. I'm not the guy to talk to on that one.
Right. But somehow, what it sounds like you do know is that in the end, it's good for you as the investor.
Yeah, I mean, we get developer fee up front, and then we get a portion of the building as far as ownership goes. So, and then management of not the project. I have a project manager on something to scale. I wouldn't do it in house. We have a builder that handles all that, but we might be involved in the ongoing property management of the property.
Right.
So there's that aspect.
Right. What are some systems that you've developed along the way that you said, man, this was something that took us, I guess one of those fast track systems where maybe you struggle with something for a long time, then all of a sudden you're like, oh my gosh, we implemented this, and then it was so much better.
So there's a lot of automation systems that we use to make life better that I've kind of implemented. I follow a 4-step process of looking at things that come across my desk that need to get done. The first thing I do is, can I eliminate this? Does it need to be done? Then I ask, how can I simplify this? To quote Tim Ferriss, what would this look like if it were easy? Then how can I automate this? How can I make it so no one needs to touch this? And I'll focus on that. And again, I'll circle back to that element right there. And then lastly, delegate. How can I pay someone else to do this so I can focus my time on development of the business, working on the business as opposed to working in the business? So those are the 4 steps that I go through when I'm looking at any task or project, And as far as the automation goes, for example, we had an issue where we were drafting purchase agreements and contracts for the front end to put offers in on property via the what we call the MLS. It's the service that it's like kind of like Zillow, but it's for realtors. We were using hand drafted contracts, sending out, either hand drafted or through the computer, typing them out. And it's really cumbersome and time consuming, even when you've got form-based offers and you're just filling in fields. So what I did is I looked at this and I'm like, okay, well, here's the criteria that I really want to buy on. And here are factors that are important to me to buy on. And I looked at how can I train a learning algorithm to filter out the properties that I like and then learn the ones that I really wanted to do moving forward. So I worked with a coding developer overseas, and we built a program I call CompuRets, which is basically RETS is the database system that's used to house all of the available properties on the market. And all of their information. And we can take that information along with market information, demographic information, geographic information, and it filters out selected assets that need to be bid on or offered on. Then they run through me and I say yes or no on them. And as I say yes and no, the system learns which ones I like and which ones I don't. So it's got basically the benefit of having the computer does the filtering, but then it also looks at my brain and what I like and what I don't, and it's able to be trained to bid on and offer on what I like and what I don't like. And then I let it go, and it actually creates the whole process from finding the property, underwriting the property as much as possible based on available information in the world via data mining and scrubbing of databases that exist out there, public records, neighborhood demographics, crime rates, the whole 9 yards. And then it creates the paperwork, develops the package that gets sent to the offering agent, emails it to the agent, and then creates a task for follow-up in my sales pipeline. I have a Kanban board, which I use for opportunities in play, and then actually does follow-up emails to make sure that it's been received. And when they respond, then I take it over. So the human interaction comes at the end of the day after the offer's been submitted and we've got a response from the other person. Then I get involved and close deals. So it's amplified my ability to get stuff done 1,000-fold when it comes to the acquisition side of things.
Wow, that's next level. That's next level when you're developing, you're hiring your own coders to build a program that's specific for you. And it sounds like one that works really well.
Yeah, it's working. Actually, it does work pretty well. It's nice. So I'm looking at other opportunities to take that basically artificial intelligence and learning system and combine it with the data mining and bring it into more aspects of the flow. And I use little automations all the time as well. I have a number of canned responses that I use in emails that are used. I don't schedule meetings anymore. I have that all done via, I won't say it's a bot at this point in time. It's really just a scheduling software. But and we're working on developing our own bot for the site, which is coming soon, and redeveloping the entire website. And it's really, I look at websites at this point in time as being, for our business, it's really just a business card. It's
right.
It's a portfolio is what it is. It's not lead collection. It's lead conversion, I guess, is what you would call it, because people come to me primarily, some people will come from this conversation we're having right now, Sam. I'll get some calls and emails, sure. But people primarily come to me and come across me because of product we have offered in the marketplace, and they come looking specifically at that product. And then we have the conversation of, okay, well, what do you want to accomplish here in the Detroit market, and how can I help you do that? Mm-hmm. And a lot of people are, they look at the high returns of, I can make 20%, I can make 30%, and I can buy stuff and sell it for triple in a year. And the answer is, well, yeah, I've done all of those things, but by and large, they're not going to happen consistently, and they're certainly not going to happen to you at all unless you're lucky as hell. What's going to happen is that risk reflection of the 20% ROI is going to hit you on the other side of it. It's like playing options on the stock market. Right. If you're not in the game, you're out of the game. And if you're outside, how are you going to make money inside when insiders know what's going on? Right. I'm an insider. I only do stuff in Detroit at this point in time. I've considered other markets, but I think that the frothiness that we've seen in the past due to the coronavirus and the corrections that are coming, I don't see the frothiness being something that's going to cause me to find it necessary to go to Nashville or Memphis or Gary, Indiana, or Flint, or even Saginaw, Grand Rapids, what have you, Toledo, other markets that I've considered that have a similar product as Detroit but aren't quite as frothy. Mm-hmm. I just don't see it happening. I see us entering into and I don't have a crystal ball, so I could be wrong, but it's okay, because whatever happens, we'll nimbly adapt ourselves to the change of the marketplace or the lack thereof.
Sure.
So if I need to go out of state or out of market, I'm prepared to do that. But I'd much rather work right here in my backyard, which is Detroit.
Right. And it sounds like it's a market you've got figured out. So, I mean, that's a whole new learning curve that maybe you don't need to undertake. So.
Yeah, if I worked in other markets, I would definitely not. I would look at it as I'm an outside investor. So how do I work there? And the answer is, if I'm doing Class C housing and I'm just going to buy in another market and I'm not working directly with an insider, I'm looking at, stabilized apartment buildings, nothing really risky. I'm looking at much lower returns. And anybody who wants to buy here who doesn't want to work with a local insider and, partner with them or find someone that really can help them out and is willing to put the time and energy to hold their hand in the process. Like, you're dealing wild west here, the wild Midwest of Detroit.
Right.
20% returns are a reflection of the risk, and you can get chewed up fast by hooking up the wrong people and doing the wrong business deals.
Right. Absolutely. Let's jump into the final four here, Brent. If you were to distill everything you know about investing in real estate and you were giving this one piece of advice to an aspiring investor, what would that one piece of advice be?
Give them what they want and give it to them on time.
That's a good one. Question number 2 is, what are you doing currently to stay on top of your game?
I'm reading Atomic Habits right now, and I have a daily planner of things that I do. Every day I check my GCal, my Appfolio Cal, my Builder Trend to-dos, my ClickUp application for task management, of course, emails, and my Kanban board on my sales board. So every morning I do those 6 things. Daily, I walk my dog every day. I'm using Streaks on my phone to try and get that as much as possible. So I'm trying to get at least a mile or 2 in a day. I lift 3 times a week. I'm going to say that I've been doing keto and intermittent fasting, and right now it's a little bit more challenging because of the fact that we're heading into the holidays here.
Right.
I'm not sure when we're going live on this, but that's where we're at right now. So, but I'm still focusing on making my diet somewhat healthy so I can be more active and more present mentally.
Right.
Taking care of my family, meditating, getting good sleep, all of the things to take care of myself as a human animal and also a spiritual being, having my human experience. So those are the things that I'm doing in addition to the reading,
Sure.
which is very helpful.
Right. No, that's awesome. Yeah. Taking care of both of those fronts is really a precursor to success in any other front. So That's fantastic. When it comes to giving back, what's one way that you are making the world a better place?
So we as a business, in addition to taking care of my family and, focusing on the home, from a business standpoint, we just got makedetroitbetter.org, which we haven't launched yet, but we're looking at the opportunities of, we've done one project where we've taken this work with this program called Road to Freedom, where they're dealing with convicted felons and recovering addicts and getting them on job sites and teaching them how to swing hammers and work. I am a recovering addict. I have 20 years clean and sober now as a lifestyle. But in the 90s, I was a wreck. I was basically homeless at one point in time, living out of a car, still trying to manage working while strung out in Los Angeles. I came back to Michigan in early 2000, and was fortunate enough to have a bit of a spiritual awakening and get my life in order over the next few years. It wasn't a fast fix, but and I still work on it to this day. But daily spiritual maintenance for sure helps me be able to give back. So just by being sober and providing a good family life and good business life for the people I work with, living my life by spiritual principles, and also having a good core set of values helps out a lot. And starting to give back to individuals by giving them work when they're in kind of a similar situation to that I was back in the day.
Right. Understood. That's awesome. Brent, if our listeners want to get in touch with you, what's the best way to do that?
Just go to acquio.com, AQQUIO.com, acquio.com, and you can hit me up on there and send an email, connect, send a link to a conference call, and we can talk.
Brent, thank you so much for your time today. This was awesome. Certainly appreciate it. And the best of luck to you there in Detroit. And again, thank you so much.
Love it, Sam. Love it. Good talking.
You too. Bye-bye.
Thanks.